Good afternoon and welcome to the end of day review for today. And today is May 21st, Tuesday 2024. It's second trading day of this week. And look at this week, we don't have the high impact news, but we can have medium impact news right there. Tomorrow is the FOMC meeting minutes can release at 2 p.m. That I remember last time it did create some. It have some huge move right there, and similar to that we have a PMI come out on Thursday at 9:45. So basically we have something going on for us tomorrow. Because the last 3 days is like a retracement day, you can see that when we look into the chart right there. And we are, by the way, we are in week 21 of the year 2024. 5 more weeks, we will end the second quarter right there. So we only half of the second quarter. Very good right there. So we are in this week right there, right here. So next week we're gonna anticipate the GDP data being released on May 30. May 30th next week, which is right here, the last Thursday of the month that we're to release the data. So we're gonna see how the market's gonna set up for that data release. So basically, we're gonna look for the PM on Wednesday, so we can know. Look 4 hour PM GDP data, and then we see how the 9:30, 8:30 the data gonna release. We just start with the 4 hour, the night right there. And then after that, we're going to look for the next, the beginning of the month, we're going to look for the non-farm payroll. Just keep in mind that the non-farm payroll, the beginning of the month, and the GDP data are going to be at the end of the month. So those two data is really set the tone for the market open of the month and how the market close of the month. So that's very good setup for it right there. And then we have a CPI always in the middle of the month also. So basically, if we trade around the economic calendar and event, we can make some good move right there. And then after that, we're gonna look at the mid-month in June, second week or third week of May. It gives us of June. We see the FOMC meeting and then the CPI data. See the CPI data June 12th right there. So basically, in the second week of June, we have a huge move because it have the immersion between the FOMC and the CPI data right there. Yeah, so it's very critical week for the rest of the year for that matter, because June is like a mid of the year, right? Because it's the end of second quarter. So it can give us a lot of signal where the market gonna head for the rest of the year. So it's a lot of people anticipate that. All right, so now we go into the charts for today. Well, first we look at the daily between the S&P and the Nasdaq. We see that today it make a diversion. Basically, the Nasdaq make a higher high, but the S&P make a lower high. So let's see if the sell-off gonna, because it's diversion at the high, right? Then we anticipate it gonna reversal. In order for it to be a reversal, we really want to see what. Well, we see the level test from below, test from below twice, and today break it. So we would like to see tomorrow we're gonna be test from above, another Wednesday, another retracement day. I mean last 3 days, 4 days, 1, 2, 3, 4. Start from Friday. Actually on Thursday, retracement. Thursday, Friday, and Monday, Tuesday. So it's the huge liquidity congest around here. But if we look at the level itself, we can see that this 37 right here, picture is the key level. So it tests, it did break it today. It tests from below today, one on Thursday, and then on Monday, today break it. However, on the ES, it failed to make a high, but the Nasdaq did. So let's see. Okay, but the Nasdaq is really a short setup. For that matter, if we are look at this level, you see that break, and then you have a hammer test from above. So it can break right there. Right, we see the setup, right? That's what we want to short them. When we're going to see, we want to see this break and test from above, then it's gonna be reversal. That's what the setup we want to see. Yeah, let's look some of the setup we see before, so we have an idea what is a fall breakout right there. Basically, we're looking for something like this. We wanted to break the level, and you see that it tests from above, and the next step we're gonna reverse. So have break, retest from above, and then it's gonna reverse. The same idea right here for long setup. You want to break that level, you want to retest. If it retest twice, that will be much better, because the more it retests, the explosive when it reverses. You see that? So that's the idea right there. So basically on the Nasdaq, it's a short setup right there. You know, if we trade the Nasdaq, we're gonna put a sell stop right here. There's no reason for it to come back to this level. It already break it, already test from above. There's no reason to come back. The only reason to come back is to break it. On the S&P, it's not so clear that it hang above level, but we can see at this level right here, the 28, maybe at 37 is not so clear. Maybe tomorrow we will have a more clear picture, but at this level right here at 28, you can see the short setup if you come back to this level, because you see that it breaks from this level, it tests from above, one more time. There's no reason it's come back to 28, but for some reason, if tomorrow come back to 28 or Thursday on Friday, something like that, we will go all in. We go all in and short them. At least we aim for 15 right there, 28.15. So we have 7 point, which is 1 hour right there. But if we go all in, we get 20 contract right there, then we can have a huge gain right there. And if it break this level, I think it will go more than just it go down more. It may go all the way for this sell side liquidity, another 10 point right there. So that's how I set up. On the Nasdaq, the short setup we saw is forming, but on the S&P, it's not there. I mean, it's not there for us yet. So let's be patient and wait. All right, for today we just All right, let's go to see what trade we take for today. Today we just play around and we make the huge a lot of mistake. But anyway, it's good that we make mistakes so we can learn. So no shame, no guilt about making mistake. That should be our state of mind right there. Because we make mistakes that mean we learn. Otherwise we're not gonna learn. Okay, so let's go back to the trade, the last trade we take, where we take 6 trade, right? 6 trade. Here's the idea right here. It's kind of yeah. Let's watch the recording. The last trade we take. So we have idea. Let's watch this. Alright, here's the recording of the last trade we take. By the way, we use the practice account because we blow up our account. We have to wait for the reset next month because every month it's gonna reset our account. So we just play around with our practice account. So you know what? We go in right here. The reason we go in right here because we chase. Let's be honest. We saw the huge move right here. We jump in and we chase. We thought, wow, we're gonna go. Because we look at the a daily. Look at the daily. We believe that it's gonna go to up level, and that's right. It's right. That's which we go. We go in and chase them there. We believe it can. We believe that it's going to go up to that level. That's what we decided going and chase them. And let's see what happened. So we go in a very high right there, and we set up to target 53.44. Let's see, 53.44. Yeah, it hit that level. It hit more than 44. It goes to 47 right there. We chase, and let's see what happened when we chase. And can you believe that? Now we are still chase. FOMO right there. I thought that we're done with that, but apparently it's not. Park up is still chase right there. But I'm glad we make that mistakes. We let that park up ourselves out today, right? It's a hidden park of ours. At least we practice, we let it out. So we can know where it come from, and we know we can learn how to manage it. That's the beauty right there. So don't afraid to make mistakes. That's the theme right there. Because when we make mistakes, we know what part of us that make us to click right there. Click that trade. The FOMO, right? The fear mixing out is so strong. She's still in us. But day by day, we manage it better, for sure, no doubt about that. It used to be very strong, and today, we seek our loss. We don't engage, but for the last hour, we try to engage. But that's the beauty right there. We have to engage. So good. We can see, what mistake we make, what emotion that. In this case, the FOMO, what trigger our FOMO, because we don't let it play out. We will not identify. The first thing we have to identify the problem, the errors that we make. When we identify that, we know, we analyze, and then we can improve it. So that's the beauty of keep involve ourselves. That's the growth mindset right there. Never be afraid to make mistakes. So go back here, we chase them, right? But when you chase, what happened? When we chase them, we become panic. That's the side effect of a chasing, because when you're chasing, you not go with your setup, so you just go with the flow, or for that matter, or just because you chase, that means you expect it to, to go to your direction, continue to rally. But when it go against you, then you got panic right away. That is the nature of the FOMO right there, chase right there. And we learned the real lesson today right there. We still learn every day. That's the beauty right there. And when we chase, we put the stop loss too tight right there, right? Because we chase, we're thinking about a gain. We're not thinking about loss. That's why we tighten our stop loss right there. And you see that, look for we in the trade for how long? 2 minutes right there. We're doing good. Now we look to ourselves in the mirror. We scare. We say, wow, what's that? What is going on? We thought, yeah, you see, check out right there. Yes. Our mistake right there. Don't chase. When it break out level, and we want the real breakout happen, right? Because we want to trade a real breakout right here. Then wait for the candle either test from below, any level, test from below. But if it not test from below, don't engage. So we lost the trade right there. We chase them, and look what happened next. So we take 2 trade right there. I mean for the first trade, it stop it out, and look right here we engage again, and look at that, we sell 10 contract, and we can see now, we look back, we can see our logic right here. And what was okay, so our logic is that, all right, it's already tested level, it break level, and it tests this level from above. There's no reason for it to come back to that level. Perfect. But here is the mistake we make. You have to wait for this candle to close. Otherwise, it's still a valid point right there. It still go back and forth that level. It's not complete yet. So in order to follow the logic that, all right, it break and test from above, then it can be full breakout at this level, then what? Then you have to wait for this candle to form, to finish. Basically, we jump in too early. Go back to the setup right here. Right, we want to see a break and then the retest from above. That candle is still forming. It's not complete yet. If it complete and is retest from above, then sure, we can put a sell stop at that level, at that level right there. Sure, you can put a sell stop right there. But you have to wait for this candle to finish, and because of the FOMO, in this case, it's not really of the FOMO, but the FOMO is the trade before that. You can see the trade before that we lost. In this case, we really want to get back. We just lost, right? We just lost 5 or something, right? Our ego going want to take a revenge trade, or want to guess the loss right away, and that is a very normal emotion. All of us, when we lost, we want to get back. When we get the money, we lose back, and it's just human nature right there. And trading is a completely opposite to our so-called automatic response. We have to be mindful. The beauty of trading is that it raises our conscious, our awareness to the next level. That we have to be mindful that in this, we caught up in this moment. Now we reverse. We see why we do what we did right there. You see that we jump to 10 contract for what? it's not really formed yet. But the reason we jump in because we want to get back the loss. That's our old self right there, and believe it or not, it's still there, and it's still fresh and raw. And anyway, the more we practice, the more we learn how to manage our raw emotion right there. It's still there, because we are still stuck in our old mindset right there. That when we lost, we want to get back. You see that? The lot right there. The first trade is FOMO, we lost. The second trade, we just revenge. We want to get back the loss. That's the reason why we jump 10 contract. And look, we already promised ourselves at the beginning of the day, we say, oh, today we just hang out. We just try to be chill out. We're not take any heavy side. And look, we take a 10 contract for what setup? It's not even formed yet. You see that? That's now we reverse engineer. We see how we make the decision in real time. The emotion really the one that drives us. At a unconscious level, we haven't aware. That's the reason why we have to practice the awareness so we don't fall into the emotion trap right here. I'm glad that we make this mistake. So now we can reverse engineer to see why we why we did what we did, right? Why we did what we did. Why we pull the trigger right there. Why we click right there. Now we can see so clear. That's the first trade is the FOMO, and it's the trade right after this, which is this trade, is what? Revenge. We try to get back the money that we lost. So we're so glad that we're recording this and we review that so we can reverse engineer, go back to we internalize how we make our decision, and we see what part of us really just unconsciously drive us or influence our decision at an unconscious level we haven't aware before, but now we are aware. And every day we're gonna do better, for sure, because when we identify part of us is go into unconscious, go to autopilot, then we can rewire. So it will better help us to rebuild the mental model that we have for trading, because the mental model in trading is completely the opposite what we have been taught in other area of life, in other career of life. Other career of life, you just go with what you already have, but in the trading world, we have to rewire our mental. So that's the beauty right there. Okay, let's continue to watch. So it's the revenge trade right there, and we sign up very quick with a 10 contract. Can you believe that 10 contract for what? It's not a really good setup at all. But anyway, let's watch. Boom! Wow, it's hit our order, right? We said, wow, that means we're right. It's gonna break the level. And now let's look what. Let's go through the. Yeah, we said, wow, it's so good. You hear that? We said, wow, it's good. So it's gonna come down. That's right. The reason is come back there to break that. We feel like we validate right there, but look, now the best part is gonna happen. You see that? The horror movie happened to us, and we start go through terrible pain right there. Okay, now right here, there are this decision we have to make. You see that? So it breaks this level, and now it tests from above. So we thinking, well, it may short right here. We may go down from here. That's why we don't close the trade right away. Even though it not go, it go again our direction. We should close right away, because this guy had to be follow through. If it fails to follow through, then you better get out and go long. And now we are reverse engineer. We see that at that moment we don't see the reason go why, because we only see the candle above the level. but we failed to see that this candle is test from below this level, so it's going to be a real breakout at this level. See that? It retests this level 1 and 2, so we should put a buy stop right here. The only reason it come back to this level is to break it, and in the real time we only see the short setup at this level, and when the markets invalidate our short setup, we still don't see the long setup. That is because we married to our bias too long and too strong. That's the reason why when the market tells us the different story, we still strongly attached to our emotion or the bias right there. We go, wow, we cannot be wrong. That is another lesson we learn right there. When we have an eye bias, and if the market tells us a different story, we have to remain flexible and flip. That's where we need to flip. We learn our lesson very, very, very good today. We can see that lesson right there. So basically, when the markets flip, we have to flip. But right here, we failed to flip. We put buy stop right there. And you see exactly what that happened. You see that? We didn't saw that level. We only see the short setup. Let's look at it in the chart. You see that right here, and this level it tests from below. You see that? It's that from below. So the only reason come back here is to break that level. Yep. I believe right here this level, and it can connect to other candle on the left also. Let's see. We have any? Yeah, close to that level. Yes, this candle or this candle. We see that? Yeah. I think this candle will be the best around this level. That's our 40, 41, either level, because it tests below. We only see test above. That's which way we make mistake right here. We see only test above right here, and we go short right there. But if we look the level above right there, we can see that it's also test from below, so you can break it. And that's what happened right there. So this can go either direction. It tests from above. If it goes here, it can break the level. But if it goes to here, it can break that level. And we have to think in both ways. But for this trade, we married to the short setup, so we only see that it's gonna come down. But actually, there are another scenario that's gonna come up. So that's the lesson we learned from review this trade. You see that? So we take a second loss. You see that? Yeah, you see it go back, and yes, we out. Now we lost 2,000 right there. Instead of loss of 500, we try to get a revenge trade. we are now lost 4,000, 4 times of that. You see, that's the powerful example of how real and raw our emotion is really drive out the decision right there. I mean, you couldn't have a better example than this example. It's so powerful. The human emotion so powerful. The emotion really impact us that we haven't aware. If we don't do the review for today, we don't go review the trade we take, we don't reverse engineer, we never identify what emotion really drive us right there. I'm so glad that we did this, so we see that what emotion really drive us, and when we identify them, we pull them out of the unconscious level. We bring the light to that, so we can see what part of ourselves that drive us to make an error, so we can improve. To start with where we make an error, we improve, then we go from there. That's the beauty right there. But we have to make mistake. Because when we make mistake, if we can identify what part of us, drive us to make that decision. If we don't make mistake, we not flush them all out, then it's still at a unconscious level, and we will never identify them. And if we don't identify the problem, there's no way we can bring a solution. That's the beauty right there. All right, so we out right there, and I think that's this. Wow, you see, it's huge right there. So you see that if we are down, you see the first trade we got stop out. If we put our stop loss not too tight, then the long trade very valid. You see right here the trade we take right there. We go long. You remember we chase, but because we chase, so we choose the stop loss very tight. But if we put our stop loss below here, well, we're gonna have a huge profit right there. All right, that's the last two trade we chase. Now see what other trade we took today. Let's get out of here and let's take the right here, the trade number 4. So we took what, trade 5 and trade 6, trade 4 right here. The idea is that good idea until we remember. So basically we short this one, right? Yeah, because we thought that, you know what, it break above this level, it break it back, so it's gonna be the second leg down, so it's gonna break this level. That's the short trade right there. Short trade. Yeah, it's a short. We do a short right there. But let's watch the recording to see how it's played out. All right, we can see the losses right there. Right, basically we saw that it break the level. Then the only one it can come back here is gonna break this level. But we a little bit naive there. We have to let this candle form. We have to test from above first. Then we can do that. So basically we revenge trades. That's the reason why we that's the first trade there, and then the second trade we revenge trade right here. Yep. Yes, we have an idea, right? But I think we go a little bit too early for this trade. We short too early, and that's the reason why we get stop out right there. See that? Yes, stop it out. Basically, if we want to short at the level, let this handle. If this candle form like that at the end, then we can short them. Otherwise, don't short them. So basically, we're going. We did take a note right there. We all go too early. He says we go too early. We have to let it test, retest from above. Similar to this setup. Right here, you have to let it form from above right there. So that's another mistake that we made for today, and that's the reason why we reverse engineers to learn the mistake we make, to see what emotion that drivers, so can try to improve it, try to manage it. Maybe we don't eliminate them 100%, but we manage them, so we reduce the errors we make. So you see, at that level, we just lost very little right there. But you see the trade that we saw before, we just get our emotional, it really take advantage, take control of us, and all of a sudden we increase the size. We're not even aware of that. So that's the beauty right there. It impacts us, at the unconscious level. So now we know Now we know when we reverse any review, we know. So next time we're gonna be more mindful. It will. I mean, it just keep practicing. We will get it there, no doubt. We'll have no doubt in our mind. Here's the trade number 3. Basically, yeah, we still don't know why we sell right here. So we sell here, it took a chase right there. In order to sell, you want it to test from above. So what level it tests above right now? None. It tests from below, not above. That's the chasing right there. Let's look at the recording to see how we can reverse engineer right here. So here's the trade. We chase them, right, because we see the candle flip. Here rejection right there, it just chase them there. It's not really clear setup. But we managed, we get out with the break even. You see that? So we go in right there, chase right there, put our stop right there. But as soon as we see that, wow, it's not a good short setup right there. When you short, you don't want it to test below from all the levels that it tapped right there. You don't want that. You want to test from above. Yep. And as soon as we recognize that we make an error, you know what? We should add one more contract in there. That's crazy right there. We thought that it's gonna be follow through. We want to add more contract, but we make mistake. That's why we try to get out at break even. You see that? You see that as soon as we saw the jump right there, it jumped from it. It gave us an idea that this candle gonna reverse. We saw that before, so that's our anticipate right there. So as soon as we saw that, we get ready to get out with break even. You see that? As soon as we hit close position right away. Yes. So you see, at this we still lost $61 for the day right there. But the last hour we make a huge blunder right there and ended up, instead of lost $61, we lost 2,000. So that's a huge lesson for it right there. That's the trade number 3. Now look at the trade number 2 we have right here. Trade number 2. Trade number 2, basically we sell. So right here, wow, the reason is also what? Yeah, in order to sell, we have to see the candle test from above. So not test above neither. So we just FOMO trade right here. You don't see a setup at all. It's a FOMO trade right there. Let's look at the recording. All right, now look at the recording of trade number 2. You see that we put a sell stop down there. Yeah, it's not right either, because basically we see that, oh, I see now, it makes sense, and it makes sense. Okay, let's see. We see the logic right there. Let's go back to the chart right there at that moment. Okay, so right here is the idea. The idea is right here. We see the level right there. So we see that it tests above right there twice. So if it come back to level, it will break. That's fine. That's the good setup. And this time we got the good setup, but it does not play into our way. It's fine. We follow ourselves, even though it's a loss. It's still a good practice. Then then does not follow our setup, and the winning trade is still bad right there. So make sure that we follow our setup even though it's a loss trade. That is the power of consistent right there. 36.50. So that's where we put in a sell stop. The logic is that if you see it break that level, and then it's retest from above one, it retest twice, Yeah. But the reason why this setup is even though it's good, but it's not high quality, because you see the candle retouch from above. It's not really a hammer candle at all. It's not dozy. It's very solid right there. That's why this trade, even though it goes to our way, but it reverses back right away. Yeah, like look. Yeah, perfect right there. But now we see the shadow right there. You want the retouch from above have to be a dozy, not the candle have a big body right there, and it makes sense. Okay, it go to level right there. Yes, it carried into the trade. Yes, it did give us some profit right there, but look, it's very tricky right here. Yeah, we have a profit right there. Yes, we have profit right there, but it's reversed very quick back, very quick right there. And see, and now this candle, we want this candle to follow through, to continue to go down. Otherwise, our short setup is unbalanced. We have to get out. Yeah, you see that it touched that, not good. I think we close the position right here. Yes, we click the close position right there. We get out because it's not valid. We take a loss. All right, that is our trade number 2 right there. Now let's see what is the trade number 1. We check. Here the trade number 1 we check the same idea. We want it to break this level and then a dozy hang above, retest from above. That's fine. That's perfect setup. But the problem we have, like previous problem, we have to wait for this candle to finish forming. It not even finish jumping right away. You see that? That's the problem. We make the same mistake we have in trade number 4 or so, something like that. Yeah, right here. We thought it's gonna be a dozy candle above the level. We have to wait. Like say right here, early. We have to wait. If we want this setup right, then that the candle close at. We go at 14, 15 right there instead of 14. Let's watch the recording to see. So here's the recording for trade number 1. Right, in order to short them this way, you have to wait for the candle to close. Basically, we put in an order too soon, and we get our order get filled. But it's okay. It's okay. We still have the way to manage this. Right, as soon as it goes to break even, we put into break even right there. Right, we want the next candle have to be follow through. Is it come back to the level that we short them? There's no way that it's gonna follow through. So that's the reason why we put to break even right away, and we get our trade. You see that we break even right there. We break even, we get our trade. So it's a break even trade. That's our first trade there, and we just pay for the commission right there. At 14 right there, you see the candle at 14. Yes, 14 right there. But you know what? If we wait 14, yeah, that's right. But you know, the next candle is not follow, but actually follow. But the next candle is gonna be huge. Even though we stay in the trade, we still take a loss right there because the huge, wick right there. Alright, that's all the trade we review for today. We learned a ton of lesson right there. Basically, we have to wait for the setup to form. Don't jump the gun too early, and don't try to do FOMO and check revenge trades. That's 3 lessons we learned right there. What else we see for today? Let's see. I think that's it for today. I look at the 4-hour time frame right here. Let's see if we see anything that's significant. Yeah, like we say, the range, the couple of days is in this range, right? That's the core range right here. Let's see if still play in this range tomorrow. You see that a lot of it's moved around this range. So basically you have a leg up, retracement complete, and it's still in consolidation right here. Retracement go back to consolidation right here. Is that consolidation? Let's see. Yeah, here's the ICT price delivery model. Basically, he said that it will never go from reversal to consolidation. So it's consolidation, it's gonna expansion, it's gonna retracement turn to reversal. Yeah. We need to check on this. But anyway, we done for today, and really appreciate your time and interest. And we always grateful for this opportunity. Do what we love, then just as coming to our way. Bye for now, and have a great evening. Talk to you later.